Hey everyone, welcome back for some more investment inspiration. Today, I want to talk to you about something that can be a lifesaver in a volatile market. Low-priced dividend stocks. These companies can provide a reliable source of dividends and also have headroom for more growth. But more importantly, in times of economic uncertainty, they will provide us with a lower chance of a huge slide down. Additionally, with a dividend-paying stock, you know these companies know how to turn a profit, and they're also not afraid to share it with their shareholders. But before you go running to invest in any old dividend stocks, there are a few things to keep in mind. First, rising interest rates and inflation can be a real drag on stock prices. Remember, as yield rises, the price of the stock falls. And as risk-free interest rates rise, like those from US Treasuries and I-bonds, yields from dividend stocks need to be higher to attract investors. So, just because a stock's price is low doesn't mean its dividend yield will stay high. Secondly, companies often cut their dividend payments as a way to save money during tough times. So be careful when investing in these high yield stocks. With that being said though, we've done some research and found 6 of the best stocks to buy that are under $10. This helps minimize the total downside of the stock. Call it pot odds or worst case scenario. $10 is not a huge downfall. Now don't go betting the farm, but if you're looking for a way to make your money work for you in a volatile market, definitely consider these dividend stocks. All dividends are calculated on a trailing 12-month basis, so you know you're getting the most bang for your buck. And to keep updated, be sure to subscribe and hit the notification bell so you can be amongst the first to know when more investment inspiration videos are available. First on our list, we have Hanesbrands Inc., ticker symbol HB. This company is one of the world's largest producers of intimate apparel and other leisure wear. I know, it might not sound super exciting, but just hear me out. Despite Hanesbrands shares falling nearly 62% in 2022, there is a silver lining. Because the stock price is so low, the yield is so much higher. Currently, Hanes pays a 9.4% dividend. That's pretty impressive. On top of that, the company typically pays out a quarterly dividend, which over the past 5 years has averaged 60 cents per share. So not only do you get a high yield, but you also get that consistent payment as well. Now I know that 9.4% yield might not be the highest out there, but when you consider that Hanesbrands is a well-established company in a very stable industry, it's definitely worth considering as a long-term investment. Now next on our list is Orange SA, ticker symbol ORAN. Now Orange SA is a diversified French telecommunications company. While this company's shares were down just about 7.5% in 2022, one thing that makes them very good as an investment option is they have a very low price to earnings ratio. Their price to earnings ratio is only 6.48. This means that investors are only paying $6.48 per dollar of company earnings. The average on the S&P 500 right now is just about 20. Another great aspect of Orange SA is that it typically pays out 2 dividends each year, one in June and one in December. Now the actual payments can vary year to year, but it's nice to know that they have been paying out consistent payments. So if you're looking for a company that's in a relatively stable industry with a very fair price to earnings ratio and consistent dividends, Orange SA might be worth checking out. Next up on our list is a semiconductor company, United Microelectronics Corp, ticker symbol UMC. Now this is a Taiwanese semiconductor company and it has a current market cap of about 16.3 billion. This company was founded in 1980 and has offices all around the world, including in the US and Europe. so makes it a great option for those who are looking for a company with a global presence. Now, one thing that really stands out about UMC is that its sales revenue increased by more than 33% in 2022. That's a pretty impressive feat and is a good indicator of the overall company's financial health. Another great aspect of UMC is that it has been growing its dividend at an impressive rate since 2019. The current yield is currently 7.6%. However, it is important to note that UMC only pays one dividend per year in the summer months, so it's more of an annual bonus than a regular income producer. So if you're looking for a well-established global company with a steady track record of growth and potentially a high yield, UMC might be worth considering as a long-term investment. Next on our list, the largest Spanish telecommunications company, Telefonica, ticker symbol TEF. This company has grown its revenue by 4.1% through the first 9 months of 2022, which shows that this company is financially stable. Now, Telefonica's stock did fall more than 17% in 2022, and their payments fell from 40 cents per share in 2021 to 31 cents per share in 2022, even though their yield is still pretty high at 8.5%. It's also worth noting though that dividends from this company have averaged 44 cents over the past 5 years, and with the revenue growth in the last year, they may move up their payments closer to that average of 44 cents per share. So if you're looking for a stable telecommunications company with a high yield and consistent dividends, Telefonica is definitely worth considering as a long-term investment. If you like these kinds of videos, be sure to leave us a like, subscribe, and hit that notification bell so you can be notified whenever any new investment inspiration videos are available. Also, please leave us a comment down below if you want us to find different stocks for your investment portfolio. Next on our list, coming in at runner-up, Rhythm Capital Corp, ticker symbol RITM. Now, Rhythm Capital Corp is a company that provides capital and services to the real estate and financial sectors. This company has a solid record of paying dividends since its inception in 2013. And one of the biggest selling points of Rhythm Capital on this list is the fact that its current dividend yield is 11.9%. Another great aspect of Rhythm Capital is that they pay a quarterly dividend. Unlike some of the other stocks on this list, which pay out a dividend once or maybe twice per year, Rhythm Capital pays out dividends every 3 months. So if you're looking for a company in the real estate and financial sectors with a track record of paying out high dividends in consistent quarterly income, Rhythm Capital Corp is definitely worth considering as a long-term investment. Now, our final pick on this list is Lumen Technologies Incorporated, ticker symbol LUMN. And it's an international technology and communications company that's headquartered in the US. Now, this company provides integrated cloud and network product and services to businesses all over the world. And it's a great option for those looking to invest in a tech company. Now, Lumen Technologies stock did take a really hard hit in 2022, along with the broader market and in particular technology. Its share price fell nearly 60%. But as we mentioned before, as stock prices fall, yield rises, and currently its dividend yield is more than 13%. It's also worth noting that according to the Institutional Shareholder Services Inc.'s Economic Value Added analysis, Lumen Technologies is more attractively priced in relation to its true value than all but a few of the stocks in the industry. So not only do you get a high yield, but you're also getting great value for your money as well. In conclusion, dividend stocks can be a reliable source of yield and income in a volatile market. And these 6 companies are great options if you're looking for that high yield and consistent dividends. I hope you enjoyed this list of the best dividend stocks that are currently under $10. For more investment inspiration, see our dividend playlist and be sure to like and subscribe if you haven't already, and we'll see you in the next video.